Alright, welcome to Chaka Quantics. Now in this video I will be teaching us, taking us through preparation of financial statements. Alright, how to prepare a financial statement. Alright, so basically, like we always do, we reference our videos to the Nigerian Institute of Quant Surveyors Test for Professional Competence Examination. Alright, so that we can have a real life example and make the teaching or the video more professional. Alright, instead of just picking examples from your head, let us relate it to something. Let's reference it to something so it can be better appreciated. The principle is the same anywhere in the world. Alright, financial statement. Alright, now we have this question here. Now it says a new generation financial institution, Peak Bank PLC, was commissioned. Now this is everything. This is the contract sum. This is the question, so don't take much time in trying to read everything. Now this question was the question we use when we're talking about when retention limit of the contract sum is exceeded. Alright, so please, you can check out that video when retention limit is exceeded. Check out the video. It is the same question. Alright, this is preliminaries, is this substructure and all that and everything. Then we have the additional information here. Or these are payments made. Now advance payments in that's not what we want here. Now these are the details, right? Now it says approved fluctuation. I've joined 45 million. Approved is 60%. Approved variation is also 60% of 98 million. Now look at the question number 2 here. It says, using the information provided above, prepare the financial statement number 1 of the project to be presented to the employer to further intimate him on the financial position of the project. This is the question. Alright, and we're asked to use these details here to do it, and that is basically what we want to do in this financial statement. This is what we are going to be using to prepare the financial statement. Alright, please refer to our question on the video on when the retention limit is exceeded, what do you do in evaluation. Alright, this is the same question. Alright, but the question number 2 is asking us to prepare financial statement on the above. Alright, so we jump in quickly. I have this is the project and particulars. Now basically, a financial statement refers to a summary of all interim record of all the financial transactions of a construction project as at the time of its preparation, with the purpose of showing all the revisions made to the contract sum in order to arrive at the interim revised contract sum. I'll take it again. A financial statement refers to the summary of all interim records of all financial transactions of a construction project as at the time of its preparation, with the purpose, take note, of showing all the revisions made to the contract sum in order to arrive at the interim revised contract sum. That is the summary of what a financial statement is. It shows the financial position of a project at a particular point in time. What has been added? What substructure? The substructure was 2 million. Is it still 2 million? Has anything been added? Frames was 5 million. Is it still 5 million? Or have we exceeded 5 million? Now you see, that is what a financial statement is all about. It shows the financial position of a project at a particular point in time, right? Showing whatever changes or whatever additions may have been done on that particular project and their cost implication. That is what a financial statement is all about. Now, preparation of financial statement is similar to preparation of final account, right? Just slight differences, and you are going to see what that is. Just slight differences. The same way you prepare financial statement is same method you prepare financial account. It is usually prepared and presented in a tabular form, setting the original contract sum and all the changes that have occurred. Right? We have the omission column, we have the addition column. The omission column represents what is in the contract sum, what is in the contract. The additional column represents the changes that may have been made, whether positive or negative, on those particular elemental cost. All right. So in final account, we have omission column, we have addition column. In financial statement, we have omission column, we have addition column. Addition column refers to account for the changes that have been done on the project over time. Take for instance, if you come here, you see substructure is 105, but upon remeasurement it is 138. Now you see what I'm talking about. This is the contract, this is the changes that have occurred. Take for instance, frame here is 258 million, but 95% have been done so far, making it 245. Now you see the changes that have occurred. You have them in the addition column. All right, I hope you get that concept of financial statement, because that is basically what we are going to be doing here. All right, now the contract sum is 1,290,860,000. all right, now this is inclusive of VAT, inclusive of contingency. So we have to come down to the adjusted contract sum, that is before these things were added. All right, so what we have here is we have 1,290,000,000. I remove VAT, which is 90 million. Then I remove contingency. Now you see what we have here. Remove contingency, less VAT, less contingency, 50 million. That's the question. All right, that is a question. See it here. VAT is 90 million, contingency is 50 million. Are we saying it? All right, so that is what we have there. All right, now these are the remeasured works. Frames was 258, is as at now, when we are preparing this financial statement, it is 245. All right, but block walling 75% have been done. Please take note this. I just put this here because that is the question. I want us to see how these things are arrived at. In a normal financial statement, you don't have this. You only have the addition column, the omission column, and the additional column. So please take note. The purpose of this here is because of it's a question. So we're just trying to analyze what gives us all these figures here. Staircase is 90%. Now this is what you have. Now at the end of the day, we add all the preliminaries. Great. Preliminaries is 48 million, right, in the contract. But this is valuation number 4, financial statement number 1, right? If you check the question, let's go back to the question. This was to prepare. Where are you? Is it here? External works is this. Where did they keep the question? Okay, advise. See, valuation number 4. Advise the architect. This is whatever will be paid in valuation number 4. This is valuation number 4. Financial statement number 1. All right. So preliminaries have been expended. Now this is the preliminary here. I didn't just formulate it; it was calculated. I won't be teaching how to calculate preliminaries in this video. Please refer to our previous video on how to value preliminaries so you can understand how we arrived at this. By now, if you are following us in our videos, you should know how to value preliminaries anywhere. It's applicable anywhere in the world. So please do all learn, practice, and become better. All right, so that's how we got 33,600,000. Now we have, you see, architect instruction. It was 98 million on a variation. 60% has been done. That's it. You have it here. Now you know why. You see, I remember I explained this before. It is not in the omission column because it wasn't part of the contract. The omission column contains what is in the contract. All right, this adjustment. Addition column contains the adjustments that have been made. All right, so 60% of this gives us this. All right, that's what we have there. Then also fluctuation, 60% as approved. Total fluctuation is 45 million, but till date approved is 60%. So we have 60% of that. That gives us 27 million. So I add up the same way we did in final account. Add up all the omissions. Also add up all the additions. All right, including the adjusted contract sum. Okay. Now then with omissions, less omissions, right? This is the omission, which is like what you have in the contract. So I less it. This gives me 787,781,000. All right. Now we add back our contingency. We add back our VAT. Now, contingency is part of the contract. Perhaps in this valuation, it has not been expended. We weren't told that anything contingent has been done on the project, so it is going back to the contract. Remember, the purpose of this is to get a revised contract sum. If you remember in final account, I said there's nothing contingent, so it is not coming in. But in financial statement, we want to get a revised. Purpose of this is to get a revised contract sum as at now of the project. Please note the difference. All right. So if I add contingency, it's 50 million. Then I add VAT. All right, which is 7.5% of this. That gives me 62,833,575 naira. So this gives me now the revised contract sum. The revised contract sum. All right. Now remember, this is a project. The client might want to know, how much do I have left, or how much more have I increased the contract sum? The client might want to know. All we have to do is to less the original contract sum. Less the original contract sum, all right, from what you have as at present, then you will get the net. Now, if it is negative, like you have here, it means they have not exceeded the contract sum. They still have something to work with in the contract sum. Now, or if it is positive, it means they have exceeded the contract sum. It means they have, if I had something like this, let me bring this here. No, this. Right. Okay. If this were to be positive, that's exactly what I want to put minus so that I can give me positive. However, but let me explain it. If this were to be positive, it means they have extended the contract figure. All right. Now, for the fact that it is negative now means they are within. Now, let me show you that they are truly within. All right. Now, let me come here. Let me add up the as at now, what they've done now. All right. So that you will see that they have truly not exceeded the contract sum. All right. They have not exceeded the contract sum. And this is what it is now, all right, as against what is in the contract sum. I will say it. This what is in the project rather. So if I subtract this from this is the project. This is where they are now. I have 363 million. All right. So it tells you they are still within budget. They have not exceeded the contract sum. That is why it is negative. If it were to be positive, all right, if I had something like this, by the time I subtracted, this was greater, I have 390, then it means they have exceeded the contract sum. So this extra amount, this becomes extra fund on the project. All right, I hope it is clear. But now it is negative, telling us that they have not yet exceeded the project budget. Basically, financial statement helps the client or the contractor. The client might prepare one, the contractor might prepare one for himself. It helps to track project cost and revenues. Right now, in this case, the client knows that, oh, I have not exceeded. I still have money to execute the works. Now you get. All right, it helps to manage cash flows. What I have spent till date, what I have recovered till date, right? It helps to manage cash flows. It helps to evaluate project viability. Am I still going to make profit on this project, or am I already running at a loss? It helps them to make informed decisions, informed business decisions. All right, and it also helps increase their ability of getting credit from their financiers. Because if you go to bank and you say bring your financial statement, bring your financial statement, let us see. If you're already running at a loss, we cannot help you, but if you're within, we can still help you. Now you see the uses of financial statement in construction. It helps in financial monitoring and control. It helps to evaluate performance. All right, it helps to evaluate performance, and so many purpose and uses of financial statement. Basically, this is how you prepare a financial statement. I'll come back again. I said financial statement basically refers to a summary of all the interim records of all financial transactions of a construction project as at the time of its preparation, with the purpose of showing all the revisions made to the contract sum in order to arrive at the interim contract sum. This is basically what has been shown here in this document. All right, I hope this helps you professionally and career wise. All right, please do, or if you're here to subscribe to this YouTube channel, please like, comment, and subscribe. Expect more and more educative content. It is Chaka Quantics. I'll see you guys in the next video. Thank you.